I regard Alibaba as one of the worst mistakes I ever made.
All right, I know it's been a long time coming, but welcome back to Play of the Day, where we discuss all things finance. That includes plays that I think have a higher risk assessment than other stocks in the market. And as a result, I believe that you should probably be leery, at the very least, of them if you are going to be looking to add them to your basket of stocks. Even if some of your favorite YouTubers that you trust wholeheartedly are telling you that it's the value play of the century. Roll that footage.
I believe Alibaba is not a value trap, and I'm going to share with you why I think it is a long-term multi-bagger. What is a value trap? My personal opinion is I don't even believe there's such a thing as a value trap. Either you're right or you're wrong. Now, what's the biggest concern about Alibaba?
China.
China has a lot of negativity around it. Are they going to war with Taiwan? Remember, when Alibaba was starting to fall, it was the whole, you don't even own the company, it's cash flows. I don't hear about that at all anymore. And even if Alibaba stopped being listed in the U.S. exchange, it would go to Hong Kong, and I'd still own my shares in Hong Kong or going to Merrill Lynch.
Yeah, or they go over the counter, and there you go.
So Alibaba has a lot of issues. But remember, you're not going to get a good price on a company unless the perception is a negative perception. And the perception on China is very negative.
Yeah, a lot of geopolitical issues, not fundamental.
It's all geopolitical issues.
Right.
Are there issues with Alibaba? Absolutely. Guys, stocks are very, very volatile.
Yes, they are, especially when there's big news involved.
And the big news about China is geopolitical.
Yeah.
That's absolutely it. Are they going to go to war with Taiwan? What's going to happen there? Understood. But remember, if you're a long-term investor, bad news is your friend. It drives down the price of the stock that you want to own.
In that video, they mentioned that Alibaba is now paying dividends. And they're wondering why. Well, the answer is very, very simple. In fact, all you have to do is look at what the purpose of a dividend is. One of the purposes of a dividend is to return some type of income to the investors, to return some type of monetary value and gain that a company has made back to the investor as well. It's a way and means to entice new investors that are interested in dividends to get involved with the Alibaba stock through the incentive of dividend payouts. I am a dividend investor, and even I do not care about this because there are extenuating circumstances, all right? But if you are new to the game and you are new to dividends, then that might be one of the things that pulls you in as an investor and gets you to invest with this company. So that is why I believe that they are now offering a dividend to their investors. You look at a company like Amazon. Amazon does not need to offer a dividend because Amazon is still expanding their business in multiple ways. So they are putting that money in that income that they receive from revenue, they're putting it back into the business that they're earning on a yearly basis to expand, to grow, all in the name of increasing value for their shareholders in the company. I vehemently disagree that all stocks are very hostile. In fact, ladies and gentlemen, that's factually false. Amazon, Microsoft, Apple, McDonald's, all stocks that have performed incredibly well since their conception. Investors in the stock market coined the name blue chip stocks for a reason. So it's a bit disingenuous to me for anyone to look at Alibaba in their assessment and try to conclude that the massive loss in stock valuation they've lost over the years can be attributed to just basic market volatility. But when your goal is to sell your followers on a tool that does all of the thinking for them, that details all the work for them, then the details tend to get downplayed and skipped over entirely. These two guys, their willingness to plug numbers into a tool that they created that spits out numbers that's supposed to tell you whether or not to invest into a stock, whether or not a stock is good or a buy or not, it's very dangerous. It's a very dangerous game to play. Buyer beware, especially considering these guys don't really ever believe in asset risks associated with a country that structures its businesses and commerce fundamentally different to the way American companies do. Well, what do you mean? The companies over in China, like Tencent and Alibaba, namely two of the top biggest companies over there, that are massive mega corporations that bring in billions of dollars worth of revenue, they are subject to play by a different set of rules than, say, a company like Amazon does. Different set of rules entirely. For example, both of the companies I just named, Tencent, Alibaba, were forced to pay the Chinese government billions of dollars behind a monopoly law. When in actuality, what really happened is that Jack Ma, the co-founder of Alibaba, thought that he could slight his own government and talk slick and that they wouldn't do anything about it. And so they said, okay, we got you. We know exactly what to do to make you bend the knee and get in line.
Another question asking about some of the situations with Alibaba. He said, how should investors view geopolitical events in regards to their investment in foreign countries? How do you look at the situation of the recent Chinese spy balloon in regards to the Alibaba investment?
Well, of course, it was a very interesting thing. Jack Ma was a dominant capitalist in Alibaba. And one day he got up and made a public speech where he basically said the Communist Party is full of malarkey. They don't know their ass from their elbow. They're no damn good, and I'm smart. And of course, the Communist Party didn't particularly like his speech. And pretty soon he just sort of disappeared from view for months on end. And now he's out of BYD. It was pretty stupid. It's like poking a bear in the nose with a sharp stick. It's not smart. And Jack Ma got way out of line by popping off the way he did to the Chinese government. And of course, it hurt Alibaba. But I regard Alibaba as one of the worst mistakes I ever made. In thinking about Alibaba, I got charmed with the idea of their position on the Chinese internet. I didn't stop to realize they're still a goddamn retailer. It's going to be a competitive business, the internet. It's not going to be a cakewalk for everybody.
Now listen to me carefully. Fundamentally, I actually agree with these guys on paper. The business side of it makes all the sense in the world as an investment to make. It's a long-term investment to make. The stock has been absolutely slaughtered to the point where if you are a long-term value investor, I definitely understand why you would be salivating to rush in and grab a bunch of shares of Alibaba. Hell, you're probably thinking about how much further it can possibly drop, right? With fundamentals that look as good as theirs, so that you can cash in even more. Which is why I'm doing this video now. Do not follow somebody into uncharted territory. And you do not know the lay of the land. Do not follow somebody. I don't care how much you like them or how many button-up collared shirts they wear. Do not blindly follow somebody into uncharted territory that you don't understand the layout. Facts over feelings. Be very careful taking advice from people that are unwilling to show you their returns. Paul Gabriel and Everything Money have done over 2.5 thousand videos, and not once have they ever shown you any of their personal returns. Please exercise caution. In what world is this safe? In what world would you follow someone blindly who hasn't shown you that they're capable of making money? Is Alibaba a potential steal in the market? Absolutely. In terms of future value assessment? Absolutely. This thing could turn around in 10 to 15 to 20 years. In fact, that's what investors are banking on, right? China is one of the fastest growing economies in the world. And to have a Chinese Amazon sitting right there at a valuation under $70 seems like a no-brainer, right? But please understand that a stock, especially a foreign stock, like Alibaba, has a myriad of other factors involved in determining its future trajectory. I hope that I've, at the very least, shown you that. I've owned Alibaba for about 4 years now, okay? In one of my portfolios, I've owned it for 4 years, and it has done nothing but massively underperform for me. If you take a look at the past performances of Alibaba in the market since its conception, it's down nearly 30% on the max chart. It's lost over half of its value on the 5-year chart and down over 40% on the last year. This isn't about how you feel, ladies and gentlemen. It's about the data. It's about political news and consumer sentiment. Consumer sentiment is how the investors think and feel about a particular stock. There's two different meanings for that. The data and political news are the facts. Every category has its place. Every category matters. But I thought you said facts over feelings is what matters. It does. Listen, if it's a fact that investors feel uneasy and bearish about investing in a particular asset because of the geopolitical news surrounding it, then that feeling becomes a fact that you need to consider in your assessment. You understand? I hope everyone understood what I just said. If you don't, hit the rewind button and run it back through, okay? Run it back a second time. Facts over feelings always when you're investing in the market. So let's look at some facts and wrap this thing up, all right? And don't worry, for those of you that think I'm incapable of looking at this objectively as an investor, relax. Relax. I don't base my decisions as an investor in the market based off of some numbers that a computer spit out, all right? I'm going to include the good, the bad, all right, and the ugly. Let's get to it. The good. Here's why everyone who believes in Alibaba sees light at the end of the tunnel. The fundamentals from a business standpoint and business perspective are more than solid, okay? They're actually outstanding. Debt to cash flow ratio, year-over-year profit growth is phenomenal, okay? The company, in terms of consumer sentiment, much like Amazon, is over here in the States, is at the forefront of their economy and positioning themselves as a brand that you simply cannot live without over there. It's smack dead in the middle of an expanding economy whose median household income is only increasing and growing as well. Now here's the bad. Alibaba is a company that has a CEO at the helm who has seemingly forgotten where he is in the pecking order, despite the success of his business, and has been reminded through corporate bully tactics and the law of the land that you only exist to serve us. And the minute we feel like you've forgotten that, we can and absolutely will remind you of your helplessness through frivolous lawsuits and public embarrassment. This isn't a partnership. It's a dictatorship. You either get down or lay down. And as an investor in a company that plays by a different set of rules that I myself am not 100% clear on, I do not feel the risk to reward ratio is worth it for me. And I have no interest in foreign companies. But you do as your risk tolerance allows. Just make sure that you don't let somebody else write checks that your ass cannot cash, okay? This was Play of the Day. Hit a like and subscribe on your way out the door. Much more videos coming, I promise you that. Thank you all for watching. If you've stuck around for this long, make sure you come back for tomorrow's video, and I'll see you all in the next video. Later, guys and gals.